be compressing that extension. So as long as it doesn't fall too much, we'll just continue this kind of measured move. And right now it's an inside day, so we'll see how it goes.
Yeah, we'll have to see. So finishing yesterday, 3.7% above the 50-day for the composite. The Qs finished yesterday about 5% above the 50-day. So Evan, you love technical analysis. What are you seeing in the market technicals right now?
Yeah. So, when I look at the market, I am very hard pressed to not like it. I mean, there's a lot of things that are sort of working right now. So from the technical standpoint, of course, major indices are pretty much all minus the Russell 2000. We're near highs, at highs right now. And we've seen the tech sort of leadership return, which is nice to see. Another thing that I look very closely at is market breadth via 52-week high list. And so when I look at those numbers, yesterday we had 186 new 52-week highs being made. The day before that, 163. The day before that, 165 on the NYSE. And that to me is what I like to pay attention to make sure we're still intact. And that number is pretty strong still right here. So I like that. And it's more to like the intermediate term, maybe outlook when I'm looking out maybe a month or so. Does not speak to maybe the next couple of days. Can we have a 2, 3, 4, 5% pullback in the market next week? Absolutely. But I still like that. The VIX seems to be in check. Credit markets are happy. So there's a lot of things that I still generally like about the market. The two things that maybe give me a little bit of concern today is actually going to be an interesting test because these yields are moving pretty sharp today. So we see TLT, IEF, those are all falling. Bond markets falling today, yields are spiking. So I think this is going to be an interesting test here for the market just to see if we can keep it all together. We don't like to see drastic, overnight big moves like this. And advanced decline line. That's something I think a lot of people are pointing to right now. It seems to be narrowing a little bit. And I kind of like when there's a couple of things that aren't working. I get scared when everything is perfect. So
too good to be true.
Yeah. So I like when there's a little worry. I kind of like messy markets. It's the proverbial sort of, climb the wall of worry type of thing. So keeping an eye on it, keeping an open mind and willing to adapt. But right now, kind of glass half full in this market is kind of my perspective.
Nice. And while we have more and more of our audience now funneling into the show, give us a little bit on your trading style, so your perspective at which you're looking at the market.
Yeah. So, basically there's three things that I am paying attention to in markets at all times. It's price, it's volume, and it's volatility. Like those are the three sort of pillars that I am always keying off of. And so I'm a very technical trader in that respect. And I build sort of trading systems that are fully rules-based. So they actually execute entirely without me, but they are based on all of my observations and kind of understandings of how markets work. Very sort of can-slim approach in, looking at earnings growth, looking at companies that just have that long-term trajectory in the right direction, and then obviously have the technicals lined up in that same kind of alignment. So yeah. Fully kind of rules-based systems. They run without me. I keep one eye on them basically at all time. They're not fast-moving day trading algorithms or anything like that. They are swing trading overnight for anywhere from a week to a couple of months. And I've got a couple of different systems. They do different things, but it's all based on price, volume, and volatility.
Very cool. Well, can't wait to dig in more into the setups that you look for and how you manage trades with your automation processes. Very cool. Now, Dave, I want to go to you and let's talk about underneath the surface. What has the leadership been looking like this week as it's unfolded? We've seen a number of really interesting moves to the upside on earnings, a couple of disappointments, but give us your sense underneath the surface of what the temperature is in the market right now.
Yeah, I think on a stock by stock basis, it has been tricky, right? Some of these stocks have run up ahead of their results. Some of these new IPOs, right, are trying to break out of narrow bases and then get totally shut down. So I think it's still this situation of a lot of rotation back and forth. And I agree with what Evan said about today being a very interesting test with the big jump in interest rates today, and we'll probably look at zero TNX, or at least I'm going to be watching that like a hawk today. How does that affect, for instance, Ali, the banking stocks? How does that affect the tech stocks, especially and those that are highly leveraged, who borrow a lot of money in order to either pay their dividend or buy back stocks? So I think right now, I think the key sectors to watch continue to be tech. You had mentioned enterprise software, a couple of days ago as a sort of a linchpin of the growth leadership, and I completely agree with that. We still have a lot of earnings to go as well, Ali, and even though this was a heavy week and the week before, we're going to just continue to have a lot of volatility as a result of the earnings. So make sure you're very aware of those key earnings dates.
Okay, well, let's kick things off, Chris,
Mhm.
CVNA rather, with a look at Carvana up nicely on its earnings report. Do you think that it's extended or is it still actionable? It did already, present some buying opportunities leading up to the report.
Yeah, absolutely. And we took it off Swing Trader the other day because we just couldn't hold it through earnings. We typically don't do that. And so this is one, it was in the buy zone when they gap out out above a recent breakout. Those can still be actionable. The thing that gives me pause about this is look at the action, the chart overall. There's a lot of, actually until recently, lots of, kind of big swings up and big swings down, kind of slashing up and down. And so that gives me pause. Is that something that, I feel good about jumping in on a breakaway gap? I think I'd rather on this one personally wait and see how it acts, and does it pull back, because the action recently since May, where it's been moving up and then pulling back to the 21-day and moving up, and so that's more uniform.
We like to see,
yeah, just action that you can take advantage of and grab those profits and then move on. So it's yeah.
Mm-hmm.
For me, I wouldn't be buying it right here. It would be tough for me.
Got it. Now, the trade with Snap is still unfolding, but basically the ideal scenario would be for Carvana to hold its gains and then form a new area that we can trade off of.
Exactly.
So Evan, I want to go to you. So Carvana, does your system ever go with any earnings gaps? Do you buy stocks on big moves on earnings like this?
Presently, no. So I have certainly as a sort of discretionary trader, I used to trade these setups a lot, and I would love that momentum and the catalyst of earnings. But I don't have anything that's in production that's trading off of this right now. So no, nothing on Carvana on my systems right now.
So then do you have a parameter for the stock needs to be within, X percent above a certain moving average, or just kind of give us a little bit more of a sense of maybe an ideal setup for you?
Yeah. So my short-term system that is basically only caring about, say, the next 5 days price action, it is going to be a little bit more of an uncomfortable system. It is looking for stocks that are in long-term uptrends. So it is got to have the trend at its back from a long-term perspective, but it is actually going to be more interested in buying pullbacks and buying sort of resets into maybe some 1 month moving averages, or I mean, it depends how it kind of lines up, but it's generally speaking going to be looking at uptrends and looking to kind of enter when things are a little bit uncomfortable. There's not the full confirmation yet, and it's kind of buying the dip. It's doing it responsibly, of course, in position size, but that's kind of the way it's operating. So for the Carvana, it's not necessarily going to chase anything like
Right.
that. For instance, one of the setups that